Hey traders, you are welcome back to the Forex Geek channel. If you are looking to improve your Forex trading skills and learn how to identify market trends with precision, then this video is for you. We are going to be covering the MACD EMA strategy, which combines two powerful indicators to help you spot trends early and trade with confidence. Okay, let's just quickly dive into how you can set it up and start trading effectively. All right. Now, why should you use the MACD EMA strategy? The MACD is an excellent momentum indicator that helps identify bullish or bearish market trends by analyzing the relationship between two moving averages. That is the MACD for you. Now, when combined with the EMA, which is more responsive to recent price movements compared to the simple moving average, you get a strategy that can help you stay on top of fast moving markets. By using the MACD EMA strategy, you can catch trends early, make informed decisions, and trade with more precision. Now, to set up this strategy, you will need these two key indicators, okay? For the MACD, the standard settings for MACD are 12, 26, 9, which represent the fast, slow, and signal lines respectively. So these settings help identify momentum shifts. Then for the EMA, the 50-period EMA helps identify short to medium-term trends. But if you want longer-term trend analysis, you can use the 200-period EMA. Okay, you can adjust these EMAs depending on your trading style. Once these indicators are added to your chart, you are ready to start analyzing the market for trading signals. Now let us talk about how to read these signals generated by the MACD EMA strategy. When the MACD line crosses above the zero level, it's a bullish signal indicating a potential buying opportunity. And when the MACD line crosses below the zero level, it's a bearish signal indicating a potential selling opportunity. All right. If the price is above the EMA, this indicates an uptrend, which supports buying signals. And if the price is below the EMA, it indicates a downtrend, which supports selling signals. Now, let us talk about how to enter trades using the MACD EMA strategy. For buy trades, you wait for the MACD line to cross above the zero level when the price is above the EMA. This confirms that the market is likely to continue its upward movement. Okay? Then for sell trades, you wait for the MACD line to cross below the zero level when the price is below the EMA. This confirms that the market is likely to continue moving downward. All right? Now, just like any trading strategy, risk management is crucial. So you should always set your stop losses just below the most recent swing low for buy trades. For example, let's say you have entered a buy trade around here after you got this MACD crossover. Of course, price was already above the EMA. So if you enter the buy trade around here, you can set your stop loss below the recent swing low. That's for a buy trade. All right. But if it is a sell trade, after you get your confirmations, MACD drop below the zero level, price closed below, the candle closed below the EMA, you can enter your sell trade, stop loss above the recent swing low. All right. Then also you should make sure that you are setting your take profits at key support or resistance levels or based on your desired risk to reward ratio. So if you are using support levels, you can set your take profit around key support levels for your sell trades, right? Then for your buy trades, if you enter a buy, you can set your take profit around key resistance levels. But just make sure you have a good risk to reward ratio. Okay, when you're setting your take profit levels and your stop loss levels, make sure you have good risk to reward ratios and make sure that you are setting realistic targets. All right. Do not trade with an amount that you cannot afford to lose. Do not risk more than 1 to 2% of your account balance in a single trade. It's not advisable to do that. Okay. And make sure that you always aim for a risk to reward ratio of 1:2 minimum. All right. Minimum of 1:2. So that even if you have the same number of wins and losses, you are still going to be on the winning side. For example, if you are always risking 10 pips to make 20 pips, let's assume that 10 pips is giving you $10 and 20 pips is giving you $20. If you lose 5 trades, that means you lost $50. And if you gained 5 trades, if you won 5 trades, it means you won $100, right? So despite the fact that you lost 5 trades and you won 5 trades, you're still going to be $50 profit. So that is the advantage of a good risk to reward ratio. All right. Now, before you start using the MACD EMA strategy in live markets, make sure to backtest it on historical data and practice on a demo account. This will help you get a feel for the strategy and refine your entries and exit. It's always important to test a strategy first on demo accounts before you use it in live trading. Once you have tested it on demo accounts, if you see that the strategy is yielding good results for you, then you can proceed to using that strategy on a live account. So it's important to verify how profitable that strategy is for you on a demo account first before involving real money. And that is the reason why it's also good to backtest the strategy. You should backtest it to see how the strategy has performed over time before you decide to invest real money into that strategy. So that is it for this video on how to trade with the MACD EMA strategy. This strategy is perfect for identifying trends early and entering the market with confidence. If you found this video helpful, don't forget to like the video and subscribe to the channel for more tips and strategies. All right. Also, drop any questions or thoughts that you may have in the comment section. In the meantime, thank you for watching, and I look forward to seeing you in the next video. Happy trading.